Good evening. I'm Doc Severson for the TheoTrade report for Tuesday, May 23rd. Now, before I get into the various charts tonight, I want to talk about the gaps that have occurred. So we had a gap that occurred here from the 21st of April. That was the Friday, so came down there, and then as of the Sunday election, so that was the original election before the runoff. So we had this big gap into Monday morning, right, and that kept on going. So that left this huge open gap, which eventually did get closed after a couple of days. Actually, this gap was closed in the Globex session, which counts for me, right? So if it is closed, that's good. That closes that gap, and that left this great big gap that was up here, right? So that actually got closed today. So we're now kind of gapless within this range. Now, the thing that we have to figure out here is this closure of this gap going to lead to a selling event at this point? So are we going to see institutions distributed into this point now that the gap has been closed, and this is a good point to sell into? We're going to find that out very quickly in the next day or so here, because if we start to see selling into this move, this could be real, and this would set up a lower high on the daily chart, and that would lead to kind of this cascade or domino effect to the downside. Now, it's important to understand that I'm not calling for this. I'm not predicting this. I'm just saying, hey, this is a possibility here that we have to watch for. And this is really what most technical analysis is all about, is not necessarily predicting that's what's going to happen, because that's impossible, right? You don't know what's going to happen tomorrow. And in fact, using yesterday's data to predict tomorrow seems to be ridiculous. It is. So what we do simply is we say, well, this is what I would see on the tape if that were actually happening to the downside. Otherwise, I would expect to see momentum carry this to the upside instead. Remember, you're not predicting what's happening on the chart. You're simply laying out the conditions which would make you be bearish or bullish depending on what the chart's doing. Okay, looking at the S&P sectors today, you can see that we had 10 up, 2 down, and one of those 2 down was the VIX, at least in the way that this is showing here. So the clear winner today was actually the financials were fairly strong. You can see this reflected in the S&P 100, or the largest stocks in the S&P is companies like AIG, Bank of America, and Celgene. So we got some biotechs in there. And we also saw some strength in energy as well too. So there's Goldman Sachs, the dark side, moving to the upside here. JP Morgan moving to the upside. And we also had Morgan Stanley. And let's see, some of the energy. US Bank was also strong. And some of the ones working to the downside were, like Lowe's, Target, some of the more retail-based stocks. So you can see clear strength across the board today, even though the market barely moved higher on the S&P, so we barely got anything. And this was mostly because our stalwart technology stocks really didn't move all that much today. So as we look at our virtual index here, which is comprised of Google and Facebook and Netflix and Amazon and Apple and Microsoft, it really didn't do much of anything today. About as close to a doji as you can possibly get, right? So just barely inching to the upside. Now, Google started the day by running away to the upside, but quickly got kind of hauled back down. You can see this sort of runaway move that it's seeing from this consolidation zone here. But the problem is this big anchor, this weekly chart, which is exhausted. But it almost seems to be a done deal that Google's going to hit 1,000, and who's going to chase it up there is going to be, of course, Amazon. Which one is going to get there first? It's hard to believe that we're talking about things like that. But I do remember not that long ago, just a few years ago before Apple split, that was the target, was as they were closing in on 1,000, it was going to be one of the big technology stocks, first ones to hit 1,000. And, here we go. We're going through it all over again with Amazon and with Google. So let's finish this up by looking at the major indices. Looking at the S&P again, this is actually, and nobody wants to hear this right now, but this is actually a fairly bullish consolidation pattern here that's showing up with a higher low off of a fear spike to the downside. Again, that massive, and I say that in quotes, that massive 45-point move that we had last week, which has done nothing but cause the slingshot. So I asked last week, is this a slingshot move or is this a shot over the bow that's going to lead to more selling? At this point, after a week, I would have to say this is more looking like a slingshot move. We would have set up the lower high by this point. Again, notwithstanding that gap fill that occurred today, we'll see whether that leads to anything. But at this point, just looking at the chart, looking at a series of candles here, I would say this consolidation is still bullish. The only problem with this chart is the monthly exhaustion. Typically, we see quite a large consolidation pattern here. It has not shown us that yet. So we haven't seen that kind of reaction that we normally would have gotten off of a move like this, but every moment in the market is unique. Now, if this was a truly healthy risk-on market, we should have seen the Russell 2000 explode by this point, but we're not. We're still seeing people holding onto the, going after defensive sectors like utilities today and not going for the small caps. This is not that healthy to see small caps basically going nowhere, and all that money is just going into a couple of very large stocks in the Nasdaq right now, which we've already discussed, right? So the Nasdaq still pumping after higher highs here. We're almost there at all-time highs again on the Nasdaq. But you wonder, with this monthly chart setting here, if this is just going to lead to a lower high or a double top up here and just more consolidation, as we're perhaps are going to start to see rotation. At least today, it was into some of the energy stocks and definitely into the financials. So just a quick look at the financials. Looking at this chart, hard to believe that this is actually going to lead the market higher from here. So even though we've had a tremendous amount of consolidation, it's still working off the election move here, the very, very strong election move that it had, and just doesn't appear to have the power to be able to move anything until there's some more clarity on Dodd-Frank, which right now is not on the front burner. So that's it for today's report. Watch that gap fill to see if we have any kind of reaction tomorrow. But otherwise, if we don't, then the dip buyers still rule in this market until said otherwise. Thanks for listening. We'll see you tomorrow.